welcome to the Cutest Corner in Hale. I'm Rebecca Johnson. This is Kristen Rabell. We're the owners and brokers of Rabell Realty Group. Today we're going to talk about spooky real estate terms. Today we have special guest Troy Johnson with FBT Mortgage. What real estate terms do we have today?
Well, let's see, we can start with the Earnest money deposit, or your EMD, also called your binder, and your good faith deposit. I'm sure you've heard of it before, or your realtor will tell you, you have to put money down in order to make an offer. I want to stop right there and tell you, you do not have to. But if you don't, it will be a detriment to your offer, because it's the way that you put money down in the beginning to show the seller that you have a good intention to buy. Now, it is different from your deposit with your lender. So you'll hear deposit twice, and it's not your deposit to buy the house, but again, it's a good faith deposit to the seller to tell them that you really want to buy a home. How much is it usually? 1 to 3% of your offer price. And with that, you would write a check to the title company or wherever your realtor holds the escrow. And in the end, it could go back to you. Say if you have a 100% financing offer, or it will go towards your actual deposit, your amount due at the end, so you don't have to bring that check to closing. Actually, we would bring it, or it would already be at the closing company. So that's, in a nutshell, the EMD escrow money deposit. What else?
Perfect. Another popular term is closing costs. And closing costs are costs that are associated with your loan. Every buyer has them. There'll be things such as, and I think you'll agree with me on this, survey, home inspections. What are their closing costs? They're things that come from the bank.
So there's the origination fees that the bank charge. That's where we kind of come in on that. There's title service fees, and then all the different services that are associated with the loan, whether it be, like she said, the survey, any type of termite or pest inspection that needs to be done, and that sort of stuff.
And those are usually paid at the inspection. Nowadays, the inspectors do want those ahead of time.
Correct.
You can sometimes negotiate them and to be paid after the fact, but usually you'll need to put a deposit down with them in the beginning.
Correct. And even if they are paid ahead of time, it's showed as a credit on the final sale. So.
Would you say that your closing costs are going to be dependent on the type of loan that you do? Certain loans have slightly higher ones.
That is true to a point, but that's usually because of funding fees that are associated with those types of loans.
And if you're telling someone what the percentage to bring of, say, your offer price or the agreed price, can you tell them a percentage that would be typical of most?
I would say probably 5 to 6% is typical across the board, no matter what type of loan. Of course, varies, but pretty close.
And closing costs are different from your down payment. They're usually needed in addition to that. So that's also an important thing to remember, is when you're saving for your home, you need your down payment and your closing cost amounts. I always think it's best to get pre-qualified and talk to a local lender before you start looking at a home, because then you'll know how much you need to save and how much to bring to closing. And it's great to have local experts like Troy at our disposal. So you can always find him online at FBT Mortgage. What other spooky terms do we have for Halloween?
Would you like to talk about contingencies?
Sure, we can talk about contingencies.
Okay. What are contingencies?
I would say the most common one that I get asked about are home inspections. And most people don't realize that that's a contingency. In our area,
15-day period.
In our area, we use what we call the FAR contract, the Florida Association of Realtors is what that stands for, and that contract gives you the ability to have a home inspection and be satisfied with it, whether you go back and negotiate for repairs, or if you go with the as-is contract, which gives you the opportunity to cancel. What other contingencies do you see?
Well, also with that, the home inspections, you just remember you can have any type of inspection. So if you want a soil inspection, or you can have an air quality inspection, or what we call the WDO. That's another term actually within the contingencies that people worry about, is the termite inspection. But it really inspects for all types of wood destroying organisms. So all that is within the inspection period. And then you have the appraisal contingency. And so after your inspections, you're lender usually orders the appraisal, or maybe the beginning part of it. We usually like to wait until the inspections come back. But then there's the appraisal contingency, and we just have to wait. There's a period of time that's already negotiated in the contract that we make sure that it appraises. And so you have that contingency. If it does not appraise, that doesn't mean you don't get the house, that just means you get to negotiate the next terms. And then
You'll have random and contingencies from time to time, such
your
as,
loan contingency.
right, your loan contingency, there'll be a time frame for you to work on getting your loan together and approved. You'll see contingencies of, even
Needing
more.
to sell your house.
Right, I was gonna
Maybe
say
you
more
have your
unpopular
house-
ones.
Right, more unpopular ones, which are, I consider the true contingencies. Maybe you have to sell your house. Hopefully, it's already under contract and you're just waiting for the day to close, because that contract as well has the contingencies we just talked about, but that's a major one. And you want to make sure that it closes first before you purchase, because you actually need the fund to that to close on this home. So that's the biggest contingency, I would say.
Yes, so those are most of the contingencies that you're gonna see. There's always something that comes up. Every real estate transaction is different. You can't say that every home is gonna sell the same. I would say in 10 years, we've never had one transaction that was like another. But back to the spooky terms.
What about private mortgage insurance? This is one for Troy.
So private mortgage
PMI.
insurance, yes, PMI. That is a big scary term, especially in our industry on the lending side. People don't want to pay it for the most part. What it really breaks down to is exactly what it sounds like. It's insurance for your mortgage. So with your standard, 20% down conventional loan, you have a significant amount of skin in the game. If you're looking at lower values than that, 10% or even 5% down, the bank wants to have kind of a guarantee that they're going to get their money, because if you decide not to ever pay the mortgage, then they only got that small 5%, and that's barely enough to really cover costs and that type of thing. So the mortgage insurance kind of covers us against the potential for default in those lower down payment loans.
Great. What kind of loans do you most commonly see PMI on?
So FHA has PMI requirement on it.
And is that a
Conventional loans.
PMI for life?
It depends. So 10% down with an FHA does have canceling PMI, but most FHA loans, because of the way they're designed, are only 3.5% down, will have PMI for the entirety of the loan.
How do you cancel your PMI? Or does it automatically cancel?
So if you have a loan where PMI does cancel, you have to actually write generally your mortgage company and request to have the PMI canceled. Usually there's steps involved with that. They'll probably want an appraisal to make sure that you're at the 78 or 22% equity stake, so they're that way.
Another lending one that I've heard buyers get nervous about are escrow fees or escrow collections. Typically, they see it on their settlement statement at closing, and they get concerned saying, I've already paid my insurance for the year, or I've already done the taxes. Can you talk a little bit about escrow?
Sure. So escrow fees are essentially establishing an account for the next year's payments. So you may have already paid your insurance for this house outside of closing, but we would collect 3 or 4 months up front, so that we have money in the account, so that when it comes time to renew the policy next year, we have more than 12 months, so that we have plenty of money to pay those policies.
So basically, you're saving, it's almost like a savings account.
Correct.
That you're paying a little bit each month, so that when the bill arrives to your mortgage company, they have the funds there to go ahead and pay it for you.
Correct.
So it's one less thing to worry about.
Right, and those are constantly updating and changing. At the end of the year, there's almost always either an overage or an underage in a small amount, and those adjust back and forth and make sure that you're covered.
So I have a lot of people that ask me, when do you not escrow taxes and insurance? And most of the time, those exact people are escrowing them. but-
Right. So I would say probably 95% of loans are escrowed. It's just the easier way to do it, because you make one payment instead of paying, your house and then your taxes and then your insurance to 3 different people. You just pay one person and the bank takes care of it. The times when you wouldn't want to escrow, I can't think of any time that it was specific that you wouldn't want to, but some people like to have more control over their finances in that way. And you're required to qualify with the escrowed payments, but you don't have to escrow, so you can always choose
But you have to have at least 20%
20% down too.
Correct.
Okay, that's what I
That makes
thought.
a lot of sense.
Thank you for joining us today at Rabell Realty Group, located at the cutest corner in Hale. If you like hearing about what we're talking about today, please give us a like, leave us a comment. If you have a question for Rabell Realty Group or Troy Johnson with FBT Mortgage, let us know in the comment marks below so that we can answer you back. Or you can always message us. Visit us online at www.buysellrebell.com or follow us on Facebook. Thanks for coming out.
Thank you.
Thanks.